Hi there, welcome to Neppy Invest and welcome to my haircut. I did this ad hoc about 5 or 10 minutes ago. I wasn't planning it. I just went, I just want a haircut. So do it yourself haircut. That took about 5 to 10 minutes. So it might be a little bit spotty in places, but I don't really care because I don't see many people these days with COVID-19 running rampant. Anyway, let's get back onto topic. The overall market also is down by quite a bit over the past week and a half or so, maybe just a week. I'm trying to remember when the first big down day was, but a lot of negative sentiment in the market. We're seeing a lot of share prices of companies fall by a fair bit. Now, when you do see share prices fall by a fair bit on companies you like for the long term, this can open up opportunities to buy into these companies at lower valuations. And I actually do have a watch list of companies that fit into that category, and Dropsuite, the company I'll be featuring in this video, falls into that category. I want the share price of this company to drop a fair bit. Sorry for any shareholders of this company that are listening, but unfortunately the share price hasn't dropped all that much. It seems like this blip in the market has not really affected Dropsuite at all. There's been a little bit of a decrease in the share price, but nothing too major. So in this video today, I'm going to have a look at Dropsuite's most recent Appendix 4C for the December quarter. This was the last Appendix 4C for their financial year. So let's get stuck into it. And before we have a look at the financials of this company and some facts, just what does Dropsuite do? Dropsuite is all about data protection. So Dropsuite, their products are aimed for businesses. I don't own a business, so more than likely I will never take advantage of Dropsuite's products. So they're all about backup, archiving, and recovery solutions. Microsoft 365 backup, Google Workspace space backup. They also are into regulatory compliance and other compliance needs, litigation, that sort of thing, ransomware protection, and also insights into email. So even though more than likely I'll never need Dropsuite's products, and to be honest with you, when I look at what they do, it doesn't fill me with, oh, I can see a massive runway, massive growth for this business. What they're doing is fitting a need out there, and you can see that with the growth of the company over the past few years. So whatever they're doing is working, and maybe they are experts of what they do, and there's a lot of companies out there who need that expertise. Dropsuite was founded in 2011 and took about 5 years before they listed on the ASX towards the end of 2016 via Excalibur Mining, which was via Goldquest, which listed on the ASX in 1983. Some websites would say Dropsuite listed then. That's not exactly true because this was through some backdoor listings. I have seen this a problem in the past when a company does do a backdoor listing, and when you look at the financials, you might think the company has been around for a long time, but that's just the old company. I've seen some people actually say negative things about a company, not realizing it's not the same company, because when you do a backdoor listing, it is not the same company. The CEO is Sharif El Ansari. He has a 5% holding in the company, so a little bit of skin in the game, but not a lot. And the major shareholder of the company is Topline Capital Management with 16.4%. Current market cap of Dropsuite, that's just above 20 cents, is $140 million. Now, when I look at this company, I would say that market cap is not too high, not too low, about right. And that's why I was hoping the share price might fall a little bit, so there could be some value there. If the market got below $100 million, I would definitely be taking a position in this company. And the ticker code for Dropsuite is DSE. Now, let's have a look at the half-year numbers, which were released in August, because their calendar year is the same as their financial year. We'll see their full-year results in the next month, maybe in a month and 1 day, because they will need to release their full-year results by the end of February. We are in my favorite time of year because of that. We're transitioning from quarterly reporting season into half-year, full-year reporting season, which is February, and it's just behind August as my favorite month of the year. Revenue for the financial year 20 was $7 million, but for the half year was $4.9 million. More than likely, we will see revenue grow by quite a bit in financial year 22. Margins, or gross margins, around or just under 70%. That's remaining stable. And the company is almost operational cash flow positive on the half-yearly basis. And there is a chance, and I think this is a good chance, we'll have a look at the most recent Appendix 4C, that they will be operational cash flow positive for the full financial year and possibly even profitable. So they are hitting a potential inflection point here. And that's what has got me a little bit excited about this company. Net cash, $2 million at the end of the half year. That is significantly increased because of the capital raising they did. I think it was like a $20 million capital raising. I'm not exactly sure why they needed it, but they have done it. And it's going to be interesting to see what the company's management decide to do with that extra $20 million. Maybe they will spend more money to grow in the future, which means they won't be operational cash flow positive, or maybe they have some acquisitions in mind. Now, the annual recurring revenue has been growing. So at the end of the half year, it was $11 million. And I'll show you the updated annual recurring revenue during this video. And the price to annual recurring revenue is at 12.7. And again, that's not too high or not too low. And if I saw that fall below 10, 7 or 5 even, I'd be definitely a buyer of this company. Now, I'm just going to go back 1 year ago to look at their December quarter results from financial year 20. Receipts to customers, 1.7 million. And we'll have a look at receipts growth through history. And it is a chart that I do like. And that's another reason why I am fascinated about this company. We are seeing cash receipts grow consistently through time. And of course, the other reason is they are operational cash flow positive for the latest quarter, but they were not operational cash flow positive 1 year ago. In fact, they were negative by $405,000. And because they were bleeding cash, not a lot of cash losing or not a lot of outflow or cash in financing and investing activities. So that means if they're operational cash flow negative or positive in operations, most of that will go down to the bottom line. So they only lost $400,000 of cash in the business and finished this particular quarter with $2.5 million of cash. Now we can see how they have performed over the past year. In fact, receipts have more than doubled from 1.6 million to 3.4 million. Now, this is just one quarter in isolation. Maybe this is a seasonally favorable quarter. It's not, but you do have to think about those sort of things when you are analyzing a quarterly report for a company in isolation. Anyway, the most important thing here is that cash receipts have grown by $1.8 million. The next thing I usually do is just to look at the growth in cost. And for Dropsuite, the growth in receipts was greater than the growth in costs. Product manufacturing operating costs grew by $800,000. Staff costs grew by $400,000. I forgot the K there. But administration costs were actually down $180,000. Also, advertising and marketing had increased as well. But the main thing here is receipts grew by a greater rate than the cost, which means the company, instead of being operational cash flow negative by $400,000, they were operational cash flow positive in this particular quarter by $231,000. That might not seem a lot, but it is a start. And if that operational cash flow can grow over the next few years, there is that potential that this company will be highly operational cash flow positive. And indeed, yes, they are operational cash flow positive for the full financial year by $259,000. Dropsuite did provide annual recurring revenue numbers in the commentary of the Appendix 4C, and this is 6 quarters of data going back to the third quarter of financial year 20, and annual recurring revenue has more than doubled during this time period, and it is slightly starting to accelerate because the last 2 quarters, the annual recurring revenue has grown by more than 2 million. If we go back to 6 quarters ago, it was growing between about 1 and 1.2 million. So it looks like the annual recurring revenue is starting to grow at a quick rate, and that's a good thing. But the main thing here, it is growing every single quarter, and up to 15.2 million. A very rough guide to judging the valuation of a company like Dropsuite with annual recurring revenue, like a SaaS company, is you just multiply the annual recurring revenue by 10, which gives a valuation of 150 million. Then you've got to take into account the growth of annual recurring revenue and overall sentiment in the space. But if we do that with Dropsuite, we get a rough estimate of the valuation of 150 million. And that's almost what Dropsuite's valuation is right now. And it is growing, so I actually put a little bit of a premium to that. So I could actually imagine the valuation of Dropsuite being a little bit higher than it is right now, perhaps heading towards 200 million. So I wouldn't be surprised to see the share price of this company increase to match the increase in annual recurring revenue we're seeing, and also the valuation right now of the company. We already know that annual recurring revenue is growing at a fairly good rate, doubling in the last 6 quarters, and this should translate to receipts. And it has translated to receipts. So this quarterly cash receipts history goes back to the March quarter 2017, which will be the first quarter they were listed on the ASX. In that particular quarter, they only had $340,000 of receipts, and I wouldn't have been interested in this company at that point in time. Even over the next year, 2 years, even though receipts were growing, the company was operational cash flow negative. But over the past 2 years, we have seen sort of an acceleration in the growth of receipts. It's actually increased from 1.1 million all the way to 3.4 million. So he has tripled in the past 2 years, and in the past year, it's doubled from 1.7 million to 3.4 million. And if we calculate the compound quarterly growth rate in receipts, we get 12.9% ever since the March quarter of 2017. And to confirm the acceleration in receipts growth for Dropsuite, I just calculated the compound quarterly growth rate in receipts for the last 2 years and the last year. And we have seen the growth of receipts accelerate in the last 2 years, 15.1% per quarter. In the past 4 quarters or past year, 18.9%. Will that continue in the future? Well, remains to be seen. But things are heading in the right direction for this company. Though two of the reasons I am interested in Dropsuite is this consistent growth in cash receipts over time, and the company is operational cash flow positive. This little table that the company did provide in the commentary of the Appendix 4C does make me think that the management of the company, their priorities are in line with where I think their priorities should be. And that is the company becoming operational cash flow positive on a consistent basis. And if they are operational cash flow positive on a consistent basis, they can grow their company organically through operational cash flow, and they won't need to raise capital anymore. So even though they have done a capital raising about 4 months ago, I think it was in August, the cash on hand the company now has, and the fact they are operational cash flow positive, means the chance of any further dilution to shareholders is becoming lower. Now just on to the daily chart for Dropsuite, and I'm just looking at 2 moving averages in this, the 100-day moving average and the 50-day moving average. So what I want to see here is the 50-day moving average, which is the blue line, being above the purple line, which is the 100-day moving average. And that's telling me there is still some positive sentiment in the company, particularly medium to long-term positive sentiment, because the share price has gone up over the past 15 months. From September of 2020, share price at that point was just above 6 cents. Current share price is 20.5 cents. Now the share price has been going sideways over the past, well, almost for the last 9 months. You can just see little troughs in the share price, little peaks in the share price as well, but gradually share price is increasing because each successive low and each successive high has been higher than the previous one. So now it could be a good time to take a position at about 20.5 cents. Probably the only negative thing is we have seen volume get lower over the past year, which is telling me the market is not that interested in this company. But sometimes when you see the market not interested in the company, you just see the share price go down gradually, which is not happening with Dropsuite. So I think when the share price does fall a little bit, there will be some buyers coming in. And I think one of the main reasons there will be some interested participants and some willing buyers of Dropsuite is simply because they are operational cash flow positive, and the annual recurring revenue and the cash receipts are growing through time, and that does make this company attractive to some investors. That's all I have for this December quarter Appendix 4C video for Dropsuite. If you do have any thoughts, questions, comments about this company, just leave in the comment section of this video. If you have any thoughts about my substandard haircut, just leave in the comment section of this video as well. That's all I have for this video. But the last thing I should mention, just like in every other video, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.